What's up, guys? It's Cash Flow Cart, and I'm back with another video. We're going to be talking about the consumer staples sector, and some of these stocks are getting pretty attractive at recent valuations. Let's get into it. So, a quick overview of what we're going to cover in this video. What's going on? We're going to look at the sector, consumer staples, from a holistic approach. And then we're kind of going to dive into, is this an overreaction by the market? Do some of these names deserve these lower valuations they're getting this year? We're going to dig into that. And then we're going to talk specifically about what I'm doing personally. And we are also going to look at some charts. So that's going to be pretty exciting. Let's get into it. So what's going on, guys? What's going on and why? Just to give a little bit of context, some of you might be familiar with the select sector spider ETFs. This asset management company has 11 ETFs, and they're basically meant to reflect the 11 sectors within the S&P 500 and kind of give you an idea of performance in that sector relative to the market. So right here, XLP is the one I've kind of been watching to reflect the broader sector of consumer staples. Let's look at some performance of this one. So here we have this orange line is XLP, the consumer staples sector, and then the blue line is just the S&P 500. So on a yearly basis, this one's down. Consumer staples are down, almost 4%, while the S&P is up almost 18%. So clearly in the past year, we can see there's kind of been this divergence of performance. And it might even become more apparent here on the 6 month. On the 6 month chart, you can see the S&P 500 is up, almost 5%, while consumer staples have fallen almost 12%. So guys, I just wanted to show this. I'm not making this up. Consumer staple stocks are, for one reason or another, underperforming the market. Let's move on. Now let's get into the why. Just a disclaimer. We can sit here all day and we can talk about why this is happening, why we think consumer staples are underperforming. But at the end of the day, we have to focus on what is happening too. The what's going to be more important than the why in this instance. But with that being said, we'll take a look at it. We've got Ozempic, which is a drug from the manufacturer Eli Lilly. And, Walmart has apparently claimed that, it's changing consumer eating habits. People are going to start eating healthier. And, however material this truly is to the market, I think the market has, kind of reacted to that in a negative sentiment. So, without spending too much time on that, Ozempic impacts shopping behavior, says Walmart. Customers taking the weight loss drug reportedly are spending less on food, and I don't exactly know how this weight loss drugs work. I'm not a scientist, but I guess they don't have cravings for some consumer staples, snacky type food as much as maybe they did in the past, according to Walmart. And then another reason why I feel like this consumer staples sector is underperforming is simply because of how attractive, this risk-free rate has been this year. And I think that's leading a lot of long-term investors to rebalance their portfolios, take some money out of maybe these value plays in this sector and, move it into, the bond market and secure more of a risk-free rate. They don't really see as much upside in holding equities that are paying dividends when they could, put their money elsewhere. And I think this rebalancing has had somewhat of an effect on this sector. Like I said before, we could talk all day about why this stuff is happening, why consumer staple stocks are kind of getting hammered. But, at the end of the day, it's happening. And as investors, we need to be ready and prepared for whatever the market's giving us. So is the market overreacting? Let's talk about it. So for an example, we're going to look at PepsiCo. And I picked this one because it's probably one of, if not the most famous consumer staple stocks. Everyone knows Pepsi, and I'm sure everyone enjoys at least one product from their very diverse portfolio. Let's look at some of the product offerings Pepsi has. And guys, you might not even know that Pepsi owns all these brands, but just to reemphasize it, looking through here, Gatorade, Doritos, Dole, Cheetos, Chester's. Not sure I know the difference between Cheetos and Chester's, but Captain Crunch. These are those cookies, tea, water, potato chips, beef jerky. This is a global diversified business portfolio, obviously. So maybe some of these brands you're not as familiar with as, they may be in other places in the world. Muscle Milk, if you like to work out, you probably enjoy Muscle Milk. Miss Vicky's, I like their jalapeno chips. Obviously Pepsi, Popcorners, that one's growing a lot. Propel, more tea, Pastaroni, pretzels. I mean, a lot of these things aren't even like junk food. I mean, do you guys consider pretzels junk food? I don't know. Light popcorn. I don't know if that's junk food either. Sobe water. I'm not sure how big that one is nowadays. Tostitos. That's probably going to be a staple of every tailgate or really any event. And then here you'll see Starbucks. What that just means is the Starbucks that comes in the glass bottle or the can you can get at gas stations or wherever. Pepsi owns that Starbucks. They don't own Starbucks, but they distribute Starbucks products. Okay, just with that in mind, how wide is this moat for Pepsi? Okay, guys, I mean, this is not just a soda business. This is snack business. This is beverage. All sorts of things that people love. Mountain Dew, Sierra Mist, even just Pepsi, the drink, has so many different categories now. You got zero sugar, different flavors. I mean, to me, this is one of the widest moats you can find in the market. And what I mean by that, the term economic moat, I think, is coined from, a legendary investor, Warren Buffett. And it basically means, okay, this is a company that should theoretically be able to produce free cash flows and revenue growth for 20 plus years. I mean, so with that in mind, that brings me to my next point. Whether or not people's taste in snack food is changing and, whether or not Ozempic is really going to have a material impact on companies' bottom line. Companies like Pepsi, they react, they adapt to changing consumer preferences, and they've proven it. They've proven it over years and years of, operations. And the way they adapt is through acquisitions of new brands, also new product offerings within their current brand. And, they figure this stuff out. So, bring me back to the main point of this slide. Let's answer the question: is the market overreacting? I'm going to say yes. I don't think Pepsi is in serious danger of, a weight loss drug materially changing their business prospects for the long term. But obviously, that's not financial advice. This is a fun and entertainment video. All right, let's keep it going. What am I doing what am I doing as I see the consumer staples sector kind of get crushed in the past, really month, 2 months, 3 months. And this is going to sound like a boring answer, but I'm watching. And I feel a lot of people on YouTube are always releasing content like month to month. 7 stocks to buy now, 6 stocks you should be buying now, or every dividend investor needs these stocks. For me, it's more of a patient game. I like to be very opportunistic with my entries, and yeah, I've kind of gotten this way through just time, trial and error, and I guess some trading background. But I'm really looking for screaming opportunities, in my opinion. So we're gonna look at Pepsi, Hershey, Coke, Altria. We're going to go through some of these charts, and I'm just briefly going to give, how I kind of see these right now. I put these stars here by Altria because it's a little different situation than the other three in the sense that I already have built a position in Altria, and you'll see that on my chart. So starting with Pepsi, for me to enter into a dividend stock, it's got to have great balance sheet, great free cash flow growth. And I see that in Pepsi. It's got a wide moat. I see that. Okay. Pepsi would be a company I could see myself wanting in my portfolio. With that being said, I'm not going to get greedy and just start picking it up because of, some recent underperformance. I've got on my chart here 144. I'm going to become very interested in it. And then zooming in a little bit, sorry guys, here in 2020, you see this double top from the beginning of the year, end of the year. Pepsi created, I guess this resistance that could potentially become a support line. And that's right around the 146. So here I've got, this box here. I'm really, like I said, I'm watching this. And if Pepsi continues to fall, maybe towards the end of this year, next year, I'll revisit it. And that's what this game is, guys. It's patience. It's being opportunistic. So, don't rush into things because one YouTuber is talking 7 stocks to buy now. I mean, that's really not realistic for a lot of us in the accumulation phase of this game. We just, we want to be a little more meaningful with our capital. We want to be patient, and we want to lock in, an attractive starting yield. We'll look at Hershey too. This is obviously a consumer staples giant. My favorite candy is Reese's. I think that's Hershey. I actually don't know if that's Hershey or Mars. I think that's Hershey. So yeah, I've put a little more like technical analysis stuff on here, but not that that's super important. I'm watching this one hopefully to when it gets around 170. I've determined the yield's going to become a little more attractive to me. But also looking here at the 200-day or 200-week moving average, you see Hershey has dipped below it in previous times, and that has been, a pretty good time to buy historically. Not to say that that can't change in the future, but again, I'm watching this one. I'm being patient, and I've made a note here of 170. Looking over at Coke, you can see I traded this one in the past before with 31 shares, some dip buys. Looking back, I feel like I probably could have just left this position on, enjoyed the cost basis, and enjoyed the dividend growth. But, we all learn lessons. I don't specifically have a price target for Coke right now because I think I am more interested in Pepsi just due to the fact that it's got more diversification, specifically in like the snack area. But I'll watch Coke and we'll see what happens with that one too here in the next 6 months to a year. Altria, like I said, I currently have a position in this one, and I've built it out over I don't even know. I guess 5 years, 4 years, 5 years. One of the 4.5. Point is, I have a position in Altria, and I've kind of been watching this consolidate and kind of a wedge pattern on the weekly chart. Um, so my mindset's a little different for this one because I am comfortable with the position in this one I already have built. With that being said, you can see I guess I've nibbled at it in recent months, kind of just to beef up the position, maybe lower the cost basis a little bit, but we'll see if I continue to add or if there's other more attractive things out there in the market. Okay, with all that being said, guys, sometimes the name of this game is not which stocks do I need to add to my portfolio right now? What do I need to do today? A lot of this game can just be simply preparing yourself. I mean, if there's stocks you would love to own in the future, you think could be a great complement to your dividend income, guys, research these companies, make notes of when the price is attractive to you or when the starting yield is attractive to you. And I guess my advice is just keep a watch list going of things that, you want to check in on month to month, whatever it is. And don't rush into any investments. I mean, do your due diligence. And just because you love a company doesn't mean you need to love the valuation of the stock. So, yeah, really build your conviction. And the market definitely rewards patience. All right. With all that being said, guys, thank you for watching. Feel free to like the video and subscribe to this channel. I don't know when I'll be releasing this video. I've got a lot of new content coming out. I'm going to keep this channel very real. It's going to be very raw. It's not going to be as flashy, but we're going to talk about opportunities in the stock market, and I'm super excited to share my journey with you guys. Take care, and everybody have a great rest of your day.